Bitcoin is trading at 74,436, dangling below every single major moving average, and the entire market is asking the same question. Is this the big breakdown, or is it the mother of all traps? While you watch crypto bleed, open a second chart and look at the Nasdaq. Look at Nvidia. Look at the semiconductor index. They are exploding to the upside. This divergence is the only thing that matters right now, and in the next 12 minutes I'm going to show you the exact level that proves which market is lying, and give you 3 trade plans to weaponize this setup. Stay until the end because the aggressive play at the 10-minute mark is designed for a very specific liquidity grab that happens only once every few months. This is your instant market verdict. Right now, across the hourly, the 4-hour, the daily, and the weekly, Bitcoin is screaming strong sell. That is the trend. That is the momentum. But here's the trap. Price is coiling exactly on a major support floor, and the strongest counter-evidence is the S&P 500 ripping through resistance like Bitcoin doesn't exist. So our session bias is simple. We fade strength into resistance and we sell breakdowns, but we absolutely do not chase shorts here blindly. The structure is a descending channel on the 4-hour, and until one number breaks, the bearish momentum is just noise. Write this number down. 74,154. That is 74,154. If Bitcoin closes a 4-hour candle below that level with conviction, the whole structure shifts from corrective pullback to trend acceleration, and we target 72,649 fast. If that level holds and we see a sharp reversal wick, this entire sell-off was a liquidity hunt. That's the game. So type in the comments right now, trap or breakdown. I want to see your bias before the move. Now let's walk the charts from the top down. On the weekly time frame, we have been in a strong sell since the rejection from the all-time highs around 109,000. The moving averages are curling over, and the MA200 on the weekly is way down at 59,000, which tells you just how far this thing can correct if the macro backdrop turns. But zoom into the daily. The daily trend is also strong sell. Price is under the MA5 at 75,905, under the MA10 at 76,781, under the MA20 at 77,365. The MA50 is at 76,415, and the MA100 is at 76,800. All of these short and medium-term averages are now clustered in a resistance band between 75,900 and 77,400. That means any bounce faces a brick wall of sellers. Even more important, the 200-day moving average is sitting at 81,677. That's the line in the sand for the entire bear market narrative. As long as Bitcoin stays below 81,677, the long-term structure is broken, and any rally is a selling opportunity until proven otherwise. The RSI on the daily is 38, not yet at the extreme oversold 30 level, which means there is still room for downside without any relief bounce. The MACD is printing negative 411, deeply bearish, with no sign of a bullish crossover. That's the daily picture. Heavy pressure. Now drop to the 4-hour and the 1-hour to find the trigger points. On the 4-hour, Bitcoin is in a textbook bear flag from the drop-off 77,400. The flagpole down to 74,150 is clear, and now we are consolidating right at the base. The MA20 on the 4-hour is at 74,900, acting as immediate dynamic resistance. Every attempt to break it in the last 3 sessions has been rejected. The hourly RSI hit 26 earlier, which is deep oversold territory, and that's why we've seen a tiny bounce. However, the 1-hour MACD is still negative, and the moving averages are in full bearish alignment. MA5 below MA10 below MA20. The order flow on the 5-minute chart is fascinating because you can see intermittent large bids at 74,200 that keep getting absorbed. That tells me there are still eager sellers ready to unload into any buy walls. The critical support here is 74,154. If that level fails on volume, the next magnet is 72,649, which is the October swing low. Below that, it's a ghost town down to 70,000. On the upside, to even start a reversal, Bitcoin must reclaim 75,905 on a 4-hour close. Then the real test is the 76,800 to 77,400 congestion zone. Anything less is just a dead cat bounce. So the technical narrative is brutally clear. Trend is down, momentum is down, the moving averages are all overhead resistance, and we are testing the last line of defense at 74,154. Here's what most traders miss. Price doesn't exist in a vacuum. Open your S&P 500 chart. Yesterday and today, the S&P is pushing to new highs, driven by semiconductor stocks. Nvidia is flying. The SOX index is on fire. And Bitcoin is flat on its back. That divergence is the story. Usually, Bitcoin acts as a high beta risk asset that amplifies moves in the Nasdaq. When it fails to do that, it's either a sign that crypto-specific selling pressure is overwhelming, maybe from ETF outflows, minor liquidations, or a major player distributing, or it's a fake-out, a trap designed to shake out weak hands before a massive recoupling rally. Look at the funding rates. Perpetual swap funding is neutral to slightly negative. That means shorts are paying longs. The market is net short. When everyone is leaning short and price stops going down, the fuel for a squeeze is enormous. That's the trap. The analysis article today literally highlights Bitcoin stalling while semiconductor stocks explode. That is a smart money divergence. If the stock market is truly in a risk-on melt-up, Bitcoin historically follows with a lag. The next 2 days are the window. Either we break 74,154 and the correlation dies, confirming a bearish regime change where Bitcoin decouples from risk assets due to internal crypto headwinds, maybe regulatory fear or a stablecoin crisis, or we hold support and rocket back toward the moving averages in a vicious short squeeze. My 1 to 2 week directional lean is cautiously bearish below 75,900, but I will flip aggressively long if we see a 4-hour close above 77,400 with volume. That's my invalidation for the bear thesis. The event to watch is tomorrow's US jobless claims and any sudden ETF flow data. If we get a massive daily ETF outflow print, that explains the divergence and would give bears more conviction to push for 72,600. If flows turn positive, the trap is set. Most people will skip the next section, but this is where money is made. Keep watching. I'm giving you 3 trade setups, each with exact entry, stop, and target levels. No guesswork. Let's build a plan. Strategy 1, the sniper. This is for the conservative trader who wants confirmation. You're not trying to catch a falling knife. You're waiting for the market to prove itself. The trigger condition is a 4-hour candle close below 74,154. That's the support level I keep hammering. A close below that on the 4-hour time frame confirms the breakdown. Wait for the close, don't jump the gun. Once that candle closes, you enter short on the next open with a market order around 74,100 or wherever it triggers. Your stop loss goes exactly at 75,220. That level sits above the recent consolidation high and above the MA20 on the 4-hour. If price reverses that hard, the breakdown is invalidated and you want out. Target 1 is 73,100, which gives you a quick 3.5% profit, roughly a risk-reward of 1 minute and 1.3 seconds. Target 2 is 72,650, the major swing low, giving you a risk-reward of about 1 minute and 2.5 seconds. Move your stop to break even once. Target 1 is hit. What voids this setup? If Bitcoin wicks below 74,154 and then immediately recovers and closes back above 74,500 on the 4-hour, do not enter. That's a bear trap and you'll be lunch. Strategy 2, the active trader. This is for those who want to work the bounce and the breakdown without waiting for the 4-hour close. The setup here is a mean reversion fade into resistance. Right now, Bitcoin is hugging the lows. If price pops to the 75,900 area, that's the MA5 on the daily and the top of the recent minor range, and shows rejection, you sell there. Entry condition. Price must tap 75,900 on the 1-hour chart and then close a 15-minute candle back below 75,500 with a bearish engulfing pattern. That shows the selling pressure is still there. Stop loss goes at 76,450, just above the MA50 and MA100 cluster. Your target one is 74,500, back near the current range low. Target 2 is 73,800. Once target 1 is hit, move your stop to entry. If the trade goes your way, trail your stop above the 1-hour MA20. The logic is sound. You're selling into a heavy resistance zone with the trend, rather than shorting into support and getting squeezed. That's how active traders survive. Let's see how aligned we are. Type your Bitcoin range for the next 24 hours in the comments right now. I'm reading them. Give me a high and a low. I want to see if the community is leaning into the trap or the breakdown. Strategy 3, the aggressor. This one is high risk, high reward, and only for those who understand that losing small is part of the game. This is the liquidity grab play. The aggressive entry is along from the 74,200 region with a very tight stop. Here's the rationale. The hourly RSI hit 26, which is extremely oversold. The stock market is roaring. The sentiment is overwhelmingly bearish. In these conditions, whales love to run stops below 74,154 to collect liquidity, and then reverse violently. You enter a limit order to buy at 74,250, with a stop loss at 73,880. That's a risk of just $370 per Bitcoin. If price breaks below 74,154 and keeps running, you're out quickly. Your first target is 75,500, right at the local breakdown level. That gives a risk-reward of over 3.5 to 1. Second target is 76,800 if momentum picks up, but you must take partial profits at 75,500 and move your stop to break even immediately. This is a counter-trend trade. It could fail in minutes. The invalidation is a 5-minute candle close below 73,900. If you see that, you're wrong. Exit and don't look back. Only take this trade if you can accept a loss and you're not over-leveraged. This is the I think the trap is about to spring play, quick risk management pulse before we wrap. Never risk more than 1 to 2% of your account on any single trade. Stay flat through high-impact news events like CPI or FOMC minutes. Stops are non-negotiable. The market is designed to hunt weak hands. Don't be won. Here's the one level that matters tomorrow. Write it down, tattoo it, set an alert. 74,154. That is the line. A 4-hour close below, it unlocks 72,649 and potentially a flush to 70,000. A strong bounce from it with a reclaim of 75,900 turns the whole short narrative into a bear trap and sends us shooting towards 77,400. Everything else is noise. Tomorrow I will be watching the US equity open closely. If the S&P continues to rally and Bitcoin still can't get off the floor, the breakdown becomes the primary path. If Bitcoin finally catches a bid and starts eating into the 75,900 resistance, the squeeze is on. The video breaking down the S&P 500 liquidity tide and the exact gamma levels that will move markets is live right now. Check the end screen. That analysis will help you understand the macro currents pushing against this crypto trade. If this breakdown gave you a clear plan and a level to fight with, smash the like button, subscribe with the bell, and drop a comment, trap or breakdown, and your range. I read them all. Stay sharp, manage your risk, and I'll see you in the next one.